Hi, I'm Pattu from FreeFinCal, and in this video, let's discuss if you have what it takes to become a DIY or a do-it-yourself investor. The fact of the matter is, if you don't have what it takes to be a DIY investor, you still have to learn to be a DIY investor. There is no choice. That is like an exam that you cannot escape from. See, for let's say you don't have, you don't want to acquire the knowledge to manage your own money. You feel that you don't have the confidence, or you don't have the patience to learn, or maybe you feel that you don't have the intelligence to get money management. That's not true, but maybe you feel that way. It's not like you can skip it, or you can outsource it to a financial advisor, say a fee only financial advisor. See, you still need DIY skills, because you still need to choose a SEBI registered fee only investment advisor who is suitable to you. So for that, DIY skills are necessary. And when you are working with the fee only advisor, you still need to gauge whether you are on the right path or not. You can't ask your advisor, am I on the right path? They may say yes or no, but you should still be able to gauge that, right? So for that, you need DIY skills. So there's no escape from DIY investing skills, whether you actually want to do it on your own in terms of managing wealth, or you want to outsource it. Of course, the main problem is most people don't really understand what DIY means. They think that this is my portfolio. What do you think about it? That's the kind of comments I get in the YouTube videos I see in forums. That's not what DIY investing is. But sir, I'm a newbie. I have starting trouble. I need some help to get. That's no. How do you? What is the problem is that people do not understand priorities. They are in such a hurry to invest that they do not understand why they are investing, how they should manage that investing, what is the first step in managing that portfolio after you start investing. Those are, so they do not understand priorities, because they are not formally understood the process of investing with a goal. There are books to read, or you can ask your financial advisor, if you can choose one. Look, I want to become a DIY investor myself, please train me. That's also fine. Many people have commented that I have stopped working with my financial advisor because my financial advisor made me a DIY. That's an awesome comment, isn't it? Many people have said that in my feedback for financial advisors. We will talk about that a couple of weeks later. So, I mean, the problem is lack of clarity in terms of what one wants. I have seen people ask, what is the best investment for 2 years? In a group like Asan Ideas of Wealth. So I ask them, stick to FDs or RDs. Then when can I invest? How about no? Then they'll say, if I say stick to FDs or RDs, they'll say, how about small cap funds? They say, I can't. You should not be using small cap funds for 2 years. It's too risky. Then how about 5 years? See, first they started with 2 years, then they will suddenly change tune and say 5 years. They are not clear about what they want. Unless they are clear about what they want, they will always remain newbies. They will always have starting problem. Having starting problem is okay as long as you are starting at the right point. The problem is most people are not starting at the right point. That is the problem. I have seen people like Sandeep who has written a guest post on I lost my sleep because when I calculated the corpus needed for retirement, but this is how I got out of it. Sandeep and his wife, they are DIY investors. They plan together. That is the point. If you have priorities, you will get it. DIY investing is not about selecting the best fund, the best stock, getting the best return. That's not how it is. DIY investing essentially is like saying, this is my need. I need this. I want to know, or I want to arrive at this target corpus for my need. How am I going to do it? I. All the answers are within me. So there are two qualities, in my opinion. First, you must have a set of priorities. I don't want to waste my time learning DIY investing. So I'm going to do a little bit of research in selecting SEBI registered fee only advisors. I have a list. Maybe you can select from there, but you still need to do a little bit of research in finding out who's suitable for you. So I'm going to do that research, and I'm going to hand over my money management to them, to that planner. I will take a call. I will tell them if I want to learn DIY or let them outsource it, and I will learn how to evaluate their progress or my progress, however way you want to call it. But there's still some time for it. I have a couple of years to learn, but I will learn it. That's my priority. So you should have a set of priorities on what you want to do. That is one way to go. Or if you saying I enjoy DIY. The people who are true DIYs are the people who enjoy doing research. They will search in Google. They will look at this website, that website. They will learn, take notes, then come up with some kind of a concept. You take that concept, put it in a personal finance forum and ask people to comment on it. That is okay. That is not a problem. You don't put your portfolio and say comment on it. That's not DIY. There's no independence there. Unless you are independent, it's not going to work. And so once you have a set of priorities, the next is to have conviction. You should stick to that plan. I am going to follow this kind of a diversified portfolio. I am going to rebalance my portfolio at this many periods. So for the first 5 years, I will rebalance it once a year. Next 5 years, I will rebalance it twice a year. I will change my asset allocation in a stepwise manner or however way you want to do it. All that is written down and you must follow it. Some fool in some personal finance forum will say this method is better, alpha SIP, beta SIP, gamma SIP. You can't suddenly say, oh, that seems better, let me try that. You cannot be wavering and fluctuating. You will always be doing that. So you have a plan, stick to it. That is why I am saying it's better for you to have personal milestones rather than saying I expect 15% return, I expect 20% return. You can expect whatever damn thing you want. Markets are unlikely to give what you want. So it's better to have personal goals. That's why I said priorities matter for the DIY investor. Otherwise, they can never be a DIY investor. Your priority can be finding a good fee-only planner. You can tell the fee-only planner, becoming a DIY investor is a priority for me. That is also fine. So that is how you, I'm not here to say if you don't have what it takes to be a DIY investor, go find a financial advisor. That's not possible. You don't have a choice. There's no escape from DIY skills. You have to learn it. You have to sit and do the research. If you are going to be asking in personal financial forums random ideas, can I invest in this fund? Can I invest in that fund? Will this fund give me returns? That's not DIY investing. That's just dreadful investing. So the choice is yours. Thank you. Bye-bye.